Hello, fellow traders. Welcome back to ReviFX, the home of trading strategy. On this video, I'm going to be showing an in-depth tutorial on how to use the Arrow MT4 indicator that has been giving us good profits over the past few months. I'm making this video particularly for those who made a purchase and who are using it in their trading but want to know better how to get sniper entries with almost zero drawdown or a tighter risk. So for this trading system, I use it along with either supply and demand or support and resistance indicator, one that is trusted. The support and resistance that I have is quite trusted. It marks support and resistance like a zone, more like the supply and demand zones. So whichever one you want, when you get the system, I will send it along with it so you can apply on your charts. So for more entries that you would have confidence in, I trade this from the H1 upwards, from the H1, H4, and the D1. Aside from this, if you can come down as low as the M15 or the M30, it's also good. But if you're playing around on the M1 or the M5, you're playing a game that you could lose. It's more like gambling. So let me show you how these entries are made. So first of all, for you to ensure that this system does not repaint, you have to wait for the candlestick to close where the arrow was opened. So it's more something like this. So our arrow opened here on this candle. We would have to wait for that candlestick to close and then we enter. Now there are two things to look out for. Ensure that price is coming right out of a supply zone for a sell or a demand zone for a buy. Now you notice that immediately price came out from the supply zone with the arrow. Price was spit off impulsively to the downside, which is a valid entry for a sell. Now what about a buy? What about a buy? Let me see if I can come up with something. Okay, let's move. This is for a sell. Now we see a buy here. Similar thing. Now I want to show you how I take almost zero drawdown entries. So if you know the concept of imbalances or fair value gaps, then this entry should be easy for you. So let's say this arrow was printed on the 1 hour candle. This is exactly what I do on the H4 candle. So this arrow was painted, it came right out of a supply. Now we could even see the evidence from this candlestick. This right here is a pin bar and it shows a sign of reversal, which shows definitely that price is about to change direction. But you notice that on this candlestick, it left this big candlestick. Now, thinking about opening this entry here and your stops here, that would be a very horrible risk to reward. That wouldn't quite sit well. So what you do, in this case, even though it didn't quite give us the opportunity, what I intend to do in this situation when it's like this is, on that candlestick, I look for an imbalance. Sorry, let me show you that. Okay, let me look for one that actually has it, so you would understand. I look for an imbalance. Let me see one that played out exactly like that. looking for one like that is quite the mission. Yeah, I got one. I got one. So for those who do not know what an imbalance is, now you look at these candlesticks. The price is quite balanced right there. As you can see, this candle followed by this candle, and each of them are touching each other. But you notice that in this case, this arrow was printed, the candlestick closed here. And by the time you wanted to enter this market, you stood the risk of a heavy drawdown because price moved up a little and came back at the point of the demand zone. So how do you then ensure that you take these trades along with them? So what I usually do is mark out that big space between the three candles. So you have to count one, two, three. There is space. What is wrong with this thing? I can even see one right there, but since I've started with this one, let me get back to it. Good. Sorry, fellas. So I'm going to use the rectangle tool to draw out that space. So you see that midpoint? I know that when price comes, it is going to come back into the zone and in fact almost around the arrow. So what you would have done is set a limit order. You set a buy limit either at this zone or at this zone and set your stops below the arrow or below this last low. So that means that the entry is more tight. And then you risk, you target rather the recent highs. You see, this is the first high, the second high, this another high. Now let's see. Another good thing is if you know price action and you know how to spot supply and demand, then this indicator will just tell you when to enter. Now look at another entry. Look at another entry. I'm going to mark that imbalance out. Some people call it fair value gap. So you see, if you entered here, you would be in big drawdown. So price came back into this imbalance. Yes, even in this case, price retraced all the way down here. But remember that your stops will be right below here because you're not entering from this candle. From this last point, this is where your buy limit order will be. And then your stops right below here. And watch the risk to reward. Price moved massively. Look at that move. This is some 100 plus pips and profit. And you know, this is gold. It has a high pip value. And then price came back into a supply zone. And you could see price moved out. Now in this case, you notice the price never retraced back. So this is basically the concept of using this arrow trading system. Because one, for you to ensure that the arrow remains, you have to wait for that candlestick to close. And if the arrow remains, you take your entry without fear, especially if price is coming out of a zone, either a supply or a demand zone. Keep in mind that what moves this market is either supply and demand. So I believe they should answer your question as to how to use the trading system to get sniper entries. I'll see you guys in my next video.